Okay, video started. Hang on. I was just given a bowl of cut peaches here. Eat them while they're good. All right. So just want to kind of make sure we get realigned here a little bit. Number one, appreciate some of the messages. We had some people that did exceptionally well over the past couple of weeks. And obviously Jay posted his. Jay's just been killing it. He's just following a very good disciplined plan. Maybe trading a little bit larger than I would prefer to see, but if he's trading in the zone and if he's trading in the right times, then, you know, those are times that you can scale up and be trading a little bit larger. So he's doing well, obviously, but had 3 others that made huge gains. So that's good. Very, very nice to see. Hopefully everyone else had a good time on there. All right. So just, wanting to realign here with the markets hitting an all-time high close. I mean, anytime it hits an all-time high, then everything comes into your mind about, is it going to start a new trend move, leg up? Kind of like breakout and then work it and then start a long-term trend move up, coming out of a deep drop. That's usually, you can get the secondary pullback. So this one here shot down all the way back up and didn't make the new high to trap and came down. So you've got several scenarios that you have to be aware of gap and trap. And, when you have a Friday move like we had, is that a hook close? Didn't feel like a hook close, but it's anytime you have a big major push in the final 30 minutes that ends with a flare, and this certainly ended with this flare right here. That definitely squeezed quite a few shorts out, I'm sure. Hopefully this didn't squeeze any longs out, but it squeezed some shorts out that may have been hoping to hold into the market short on there. So I covered my short here, as I said live, that I just got out and went flat on that. And then I had the 615 calls. We went back in, so I am short 30% on the market right now. Thought about closing that as it drifted down. I didn't even take a trim, but I could have taken some money off as it drifted towards the close of trading. But that's natural. This area right here being lost is kind of natural, right back into the base of this last little huge move. But we just need to, I want to be aware that that's how a hook close can look as well. There was a lot of volume behind this move that happened once it reversed up. So, and the thing about it is this was about as pure of a pattern as you get, right? So you had the 1, 2, 3 waves down to the break of structure, back to the down, and sometimes it's Model T, right? 50 fib of here to here to right here. And then sometimes it's a double bottom, and then generally if it gets to here, usually it's going to be a new low, shake people out, and that's exactly what you got. So three wave rule day there, with the break of structure being a fourth. You could say that's a fourth, but it's really just retracing what's already been there. So it's not like it's a wave where you can't reach the previous top, right? So this isn't really a wave. It's more of an imbalance move here between the same zones that were there. And so when you're watching these and you get a move like this back up that is penetrating down through that basing, you're almost up into here. Well, obviously that's completely different than what had been happening, right? Not just to break a structure, but you're paying attention to see how that price action worked back up above that previous basing, something that generally doesn't happen. Okay, and it did here. So it didn't here, but it did here on the third wave. It broke above. Okay, that's something to always pay attention to as well when you're trying to see if you've got a reversal and you're starting to think, number one, that you have a template 3-wave rule. That's a pretty good rule. You hit through the 3 technicals that we had marked. The third one was right here, and it broke that one, and then it barely closed back up above that one, made its bounce, came down below it, and then of course off it went. So this is a great opportunity trade late in the day based on your knowledge of a 3-wave rule. Hey, you know what? Drops back down to a new low. I'm going to take a position. My stop is going to be here, or if it's just some cheap lotto, then you can make some money that way. But it would have paid huge, right? So for anybody that did the calls, it paid off very well. So that's how we ended the day. When I'm looking here on the 30-minute chart, you could see, everything that we had been waiting for, right? And again, this zone here of breakout, right? This was our breakout zone, and it was marked by this is our main area that was flipping from the the bearish side to the bullish side, right? We've been watching this just constantly, waiting for this to either fail or to reverse flip back up. But here's the market doing its typical cruel thing, right? That we talk about all the time. And that is it broke above, and then yes, it closed above, kind of pushing up higher. And then what did it do? Did it allow you to come in the next day and just start taking a position? No, it gapped up. And that's it, it gapped up into this breakout level. Okay. And so we talk about it all the time that they're so good at keeping you from making the easiest of easy money, right? Which would be just, hey, I'm going to just see if this is going to break out and have me a stop back down at this level below. Then we already knew that. So it closes above and then it gapped up, took it away from you. But when it does that, that's a pretty good sign that you're going to have follow through, right? So this is what gave such good confidence of taking positions and more of them through this cycle here, especially. So this has been a very good move. So now, are we going to come back? You have 2 retest points, right? You have a retest point here back into the secondary all-time high, the second top that had formed before going to challenge all-time highs and breaking all-time highs. So you've got that area that could come back and retest in somewhere in that 603.17, or it could come in and come back all the way and retest that 597.50 at some point. I'm not sure that it will, but I'm just saying that generally it is going to retest this breakout. And so when would that happen, right? And if you're in a long position and that happens, well, they're going to get eaten up. Okay, they're going to get eaten up on you. So I think that you need to be out further or trade in the day and just keep a real tight eye on making sure the markets don't reverse, show some type of a reversal candle on you when we're actively trading. So we'd see it. We'd see it and be able to react to that. Otherwise, this could start just trending for a while and make a trend, and then the retest becomes the all-time high breakout level. And that's obviously our preferred structure, but we don't know what it'll be. So we'll just have to wait. If it's going to be this, then they'll run it to new all-time highs and they'll start a trend move. Okay, it'll just start going slowly, death by 1,000 cuts type chart pattern, and then it'll get to a new all-time high, and then next thing you know, you're trending a little ways. But at some point, then I would think that whenever that cycle is done, it's going to come back in and retest at least this zone, our preferred, but it could come all the way back down and retest into this top here. So we just need to be aware of the market sequences and how those tend to line up. So the MACD, if I go to the daily, you'll see here, I went ahead and added the MACD. We've got a crossing bullish MACD that's running right now, and it's running on the positive side. This drop in the market was the second largest negative diversion that we've ever had. Okay, look where we got. We got down here all the way to minus 17.5. Now I want to go backwards here and just show you. Just remember this. Okay, here, let's just, I don't think I can get, let's see. Yeah, we can. So I'm going to come down here, and it's not going to be exact, but somewhere right there. Okay, we got it right. Okay, watch this. Okay, this is -3 roughly right here, right? -3.43. It's that's on the far left side, lower part of the screen when I go over these. -3.43. Okay. This correction right here, look at that. -5.82. -3 or so, nothing, right? There's your -5 area for this correction. This was our original waterfall from when we started the service, right? That was our original. Have to sit back and watch the markets go down. Just a really joyous time. -2.5. There's your really deep correction. This one got down to -11.3. Okay. This one right here got down to -10.59, -11.52. We're all the way back, right? We're way back now. 7.58, 3. You seeing this, right? I mean, do you see what we've come through right now? There we go. This was probably COVID, right? Let's see, 2020. Yep, this is the COVID collapse. Okay, this is the COVID collapse, and here's our current low in the sequence, right? -17 area. Okay, here's COVID. So it was big. Okay, it was a big sell-off on the markets that hit. Okay, so there's nothing else that even comes close to those two events, right? Unless you go all the way back to 9/11, and then you'll have the first largest drop. COVID was the second, and then what we just went through, believe it or not, okay, is the third largest divergence down. Okay, in the market record. Isn't that amazing? What does that tell you? That tells you that there was a major oversold mark, kind of a historical major mark made there, which to me gives a continued bias to the upside, that we have come out of a very deep changing over of the shares to long-term investors who are satisfied with just sitting out now, sitting through long all of the market movements until the stocks move higher. So this move back up And then, to the plus side, and this was a pretty strong move up there. Again, if you look historically at that, you don't have too many areas that gave you that type of a upside move. This is what we're going to be watching for, is something like this after a deep sell-off, is coming up and then having a sustained move that just absolutely surprises people, right? With its strength and ability to have continuation. So I want to keep that one in mind. I'm watching the RSI here on the daily. Okay, this is short phase, but it's telling us that the markets are still in a very strong RSI position. You may say that, well, isn't that overbought? And if a stock, if it's trending, let me go to that big trend. You see that big trend there? Tell me about the RSI. Okay, tell me about the RSI. It topped up above 80 at times. Okay, it dropped down at times here in the what is that, 44.34, right? Low 44.34, and yet the markets were just continually with higher lows and higher highs. So it was trending. So you don't have to be as nervous as with the RSI as some of the other indicators. When this turned over finally, the RSI did turn over. And the way I would always do it is say, hey, I'm going to keep watching 45.4. Obviously, you're looking at 50, but I'm going to look where it turned over that last time, 45.4, and I'm going to keep watching. And if I see that here, 55, right there, it broke down below that 45, right? That would be, to me, incorporated into your warning shot that we didn't really need, because we already were looking at outside bars here, right? To be aware of a potential drop down there. So all of that comes together and works. So right now, that's pretty stable looking MACD line. Okay, crossed over to the bullish, okay, which is pink on top, yellow on bottom. That's your bullish lift, as it were. So when going down, they cross over, and the yellow's on top and the pink's on bottom. So right now, when it's trending, you'll get this a whole lot. You'll get this crossing back and forth. But where is it crossing back and forth? Up here. Okay. So until I start seeing some divergence on some of the other indicators, your bias is going to remain bullish on here. So that's the macro message. Okay. So right now we're going to be a little cautious, only because we're at all-time highs and there can be testing. You've got the Fed minutes, so we just want to see higher time frames. Okay. Every day that goes by that we hold up into a range, you get out to a week up into a range. If we're still up above, then the narrative bias is becoming more cemented, because generally, if it's going to be a top, it's very difficult for them ultimately to hold that top once they've started making their sales. So once they start making their sales, it generally will show itself, and you're able then to react to that and make your decisions of what, how you want to protect or exit the market, those type things. So short-term shakes, pretty much ignore. You're watching higher time frames. So I'm looking at the dailies right now, just like Friday. I mean, Friday, I was kind of chuckling, because people are like, oh no, the markets are we going to trap again? And so we have to be aware of that. I'm like, yeah, I see it, but you know what? I don't think the bulls are just going to let it go. I think they're going to come back and make sure that they get that all-time high close, and they did. So, all right, that's it. Any questions on that? Any comments, questions, thoughts? Does it make sense? All right, good. So let me go to just a couple of quick charts here. CRM higher lows here. This was a lower low there. I mean a higher low than here, but it is below here. Even though I like to connect through the bodies of candles. And if you're just taking the bodies of candles, then you still have a higher low than you did here. On the anytime it's turned, you have a higher low. So watch this one very closely. It's getting tight. Your EMAs are sitting super tight, and you've got crossing. This is obviously a top watch. Okay, obviously a top watch. We drop down into the 30, and you can see it's already sequenced a couple of times. You know, these were some previous pre-market. Hey guys, take a look. We got it collapsing in with a lower high and a higher low, and when it breaks, take the trade, right? So I remember I traded this one. I didn't trade the second one. This one here, which is honestly, it's prettier than the first. And then especially when they take away the, you know, look, I had a trigger here. That's probably why I didn't take the trade, is that I had a technical trigger here to go get in, and it gapped it up above. And if I was looking at the screen, I don't remember looking at the screen once it went off in the pre-market. I kind of just dissuade from those. And want to see, is it going to collapse back down in before it does anything? It didn't. It just kept on trucking, and then it came back down the next day and retested that breakout and then back up. So this is one of my favorite setups right here. And look at this volume in the last 30 minutes. Check that out. Look at, I mean, it just pales. The last time it happened was here when it was going to be making this breakout move to a new level, right? So out of its lower level, making that breakout move. So maybe it's time. But you got a pretty easy mark here, right? You could either use that, or you could use that. I kind of like that 273.35. I just like if this was breaking up above this structure, to me, this because of the setup. Okay, because of the setup, this one to me just looks ready to absolutely explode. So, and you can see, right, coming up, pushing 2, 3, 4, 5 times, and so boom. See if that breaks back up and flips to the upside. Clear line of divergence right there, right between high low. We could go way back here to April and see it. Okay, so touching back into here, touching in, falling through, trying to hold it and then failing, trying to, and then of course support becomes resistance. That's what's happening until it gets broken, and then it'll become support. So CRM, one of my favorite setups right now for flipping over and having a further continuation push move. It's definitely in the top 3. Maybe my favorite one, but it's definitely in my top 3. CVNA, you can see here just a beautiful setup. If we take this away, once this is gone, you take the next turn. Then, so we've got the turn, and that creates the higher low from here. Okay, so we've got a higher low, and then we have lower highs coming all the way through here, lower highs all the way down. And so, where would that trigger be? I like that right there, that trap candle. The algorithms use a trap candle a lot of times. So 323.38. That gets you just outside of this wedge, which actually comes all the way down to here. So technically this one would be potentially outside the wedge. That's because this is $5 away. So if I continue that wedge, let me get rid of it. Let's continue it all the way in. then technically that looks above it too, 312.45. Let's see. Nope, that's below it. I'm looking to the left. I don't see anything structurally. That right there has a possibility. Boy, it's right in the interchange. So I think we'll just have to watch. If this starts breaking this wedge, then I probably am just going to yell that I'm going to go ahead and buy and not wait for it to get all the way to there. So I'm going to basically play the wedge and not worry about a specific technical here. I mean, usually you like to have a technical, but a little bit too wide. This triangle's too long to really get a good sense of it. So, but it is a perfect triangle setup. All right, this is great. Perfect triangle setup. Watch the MACDs. If they come up, they're coming up positive. Obviously, that's a good sign too. So that's always on my other screens. It just takes up room, and I like the chart to be able to be seen. When you have all of this on here on this screen that you're trying to have with people seeing it, you want it just as clean as possible. But if you guys like the MACD on there, I'll leave it. Just whatever you think on that. Let's see. MDB, it could be getting close to time. I mean, this has been a watched pot, much like UNH. You don't want to miss it. You could see it's tapping multiple times, tapping this. This is a very bullish pattern. Go get your 411 handy chart out for bullish wedge, and you'll see a great representation of that, right, on there. So you got that cheat sheet just to kind of keep you. It's just to keep you grounded, you know, of be able to look and say, I spot that. I can spot that upside pinging there with the rising wedge into. It's not a rising wedge that would be negative. It's a flat top wedge. Okay, so a rising wedge would be, you know, if it was doing this. Okay, that's not what's going on, right? You have a flat top wedge going on, so it's not a bearish wedge. It's a strong bullish with demand getting to the point to where they're competing, which raises then these bars. So bang, 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 knock 3 times and let me out type of a thing. So it's getting tighter. That would be this one here. If you're looking for a cheat sheet of what it's this one. Come on. How do I get that on there? Where are you? Get on there. I can't get it to show on there. There it is. Okay. That, okay, this right here, okay, where you're collapsing up in, okay, and then you're waiting for that breakout move, okay. So entry, you know, this isn't a clean entry is the only issue I have, right? It's like you've got a lower high each time. So, you know, where are you going to pick? You're going to pick this one, right? You're going to pick the midline. So what I did is I came back all the way to the left, and let me get that out of the way. I came back all the way to the left to where you had a reversal pivot here off of here. You see this right here? So to me, above this zone right here, 212.14 is worth a risk trade to enter there. And you just watch for all the regular markers. What's the macro market doing? What's the volume level on this move? Okay, so it looks ready to go anytime. And the good news is there's not a lot of volume. So if they bring a lot of volume, you're going to be able to see it. Okay, So when they come with the volume, it's pretty hard to miss. You want something like this. See that huge cluster that just finally broke this thing, and they took it away from you because they're meanies, right? But this volume, you could just see this day was just like, here we go. We're breaking this thing out, and we're going to go move it for multiple days then for trend. Schwab, very much the same pattern. Look at that. Even better though, because you're coming into it from the downside, right? So this is a flag, and it's just by itself, it'd be called a super long flag. Just been kind of going sideways since May here, pressing up, but now it's starting to squeeze. And same thing, you got this kind of a flat top here. And so, you know, you got 100. I think this stock's going to go over 100. So with that resistance there, I would just put it right there and just say, I want to see it break out. And you're not that far, 89, 99, okay, and your stop is like 89.63. So 89.63 to 9, it's like $1 or something. That's nothing. So do like an August though, because these aren't as expensive. So I would go out to August on a call, and that way your impact on the downside, if you're going to get stopped out, is minimal. But if it starts working towards the number, it'll be slow at first, but it'll quickly escalate the closer it starts getting to the big round 100. So I love the looks of this. Great looking setup here. CART. Okay, just like a lot, you know, the first thing that our eyes need to get drawn to when charts come up is where is the line of demarcation? You know, where is that midline of crossing over between bearish to your buy side and sell side? So this one is about as easy you can get. It's the 800 EMA on the 30, right? I mean, how easy is that? Thanks for all the wicks, by the way, there, right? So that would have been excellent on this pullback here. You just would have said, if it breaks these wicks, I'm going to go with the trade. And, you know, it didn't make a big move now, but this is a retest back down through, made a deep liquidity grab at a higher low. So the money came in and bought this thing. And if this breaks now back to the upside, you've kind of got yourself a wedge like right here that it closed above. So frankly, any movement that starts up after this retest back down, I think CART's going to go. And I think it's going to go 48 and maybe even new all-time highs. Wouldn't be surprised if it goes and gets new all-time highs. But it's a good looking setup as well. TTD, trying a reversal. Okay, very fractured. You can see they've taken it away, taken the downside trade away from you with the gap. They took the upside trade with the gap. So it's like you can't do anything to try to win inside the day, as it were, because the move's been made. So what you're going to have to do is look at the bigger trend picture, which is that you got a beautiful wedge, okay, beautiful wedge down here, okay, and you've got this 50 fib of the gap from this high, that low, the 50 fib. It got right down close to it, didn't touch it, 65.01. This got to 65.55. Yep, 65.55. So it didn't hit that before reversing. I would kind of read that as a sign of strength, because generally that Model T of the gap, when it gets that close, gets filled. This is one of the few stocks that has the 800 right in the middle of the mix of all of the other EMAs. I don't know what to make of that, other than maybe that's something long-term that's starting, that this is based out long-term, and we're about to get into a pretty decent trend move. But how many times do we pull these up on a chart that they're all the EMAs are clustered, right? So if I go to the daily on here, okay, that 800 is up here. So all your other EMAs, your 200s up there. So you're trying to break these EMAs back in and get them into sequence. They're not right now. They're all clustered together. So a breakout move up out of this. I like this right there. That 74.01 on the daily. Just, hey, if they're going to make it easy, accept it, where I don't have to drill down to know that you are in fact breaking above the downtrend bar, consolidation bar. But this one, I wouldn't be jumping into that for a short-term trade right now, because it could come all the way back down to start the week and do a complex consolidation, which this is. It's lengthy. It's taken a while. It's gone up. It's gone down. So this is the kind that you're watching for, that big dropout move like Tesla did, back up. And so I'd keep an eye on this. And of course, the alerts will go off to help you make that decision as well. So we jumped into some V's on the sell-off that it had, right? So it had a big sell-off. Now it's, we take that 30, you can see this wedge, it broke above the wedge on Friday. Let's see, 352.72, 352.01. So 352.72, I like that for an entry. That would be a good trigger entry. Let me keep looking back to the left here. Might want to side adjust this. No, it is an interchain area where you had a lot of resistance. Yeah, I mean, look at that. That's pretty good there. And then up, oh, this is the one we want to see. Yeah, resistance here, break above it. Fine. It took forever after that down move. It broke above it, retested back down into this base right there. There was that retest, right? This is where you would load up on the retest. And then it did break up above and started that trend move. Came all the way back down. So yeah, I think this is a great interchange point. I mean, look at it, it's just staring you in the face, right? So we just want to watch that 352.72, and we want to get at least one higher time frame. In other words, we have not had a close of 30 minutes above. That's not all the way back to here. This is the first time we had a close 30 minutes, and it lasted all of 30-minute close, 60, 90, 120. That didn't. So you had 2 hours. So you might need to go with a 2-hour or even a 4-hour close above there, depending on how fast it's moving. If you got volume that's collapsing in and it starts moving, I don't think you need to wait. But certainly it's been a while since it's closed above, even for 5 minutes, much less an hour above this level. So you'd want to put a clock on this. Once you get a close above, you'd want to put a clock and make it a top watch. So, hey, yell it out to the group, right? I've got a technical right here sitting just above that if it gets above is a trend marker. So if it gets above this and closes on a 30 minutes and I haven't mentioned it, you need to mention it, because what I'll do is I'll throw it over into my 30-second screen, and I'm just going to start keeping my eye on it to see if any catalyst shows up on that 30-second chart, like UNH did, and then I'd give the pre-alert if it gives one, and then we'd just be ready to rock and roll. So ABNB, I had looked at this one over the weekend. It's above the triangle here, so you've got a breakout, a retest right here already has happened. So this is like a top watch right here, right? So I don't, let's figure out where the line is. It closed right there. Looks like right there, top of that. top of that. These meet. This is kind of your interchange right here. So your pivot is somewhere in the 134.93. Let's go now and look at where we closed. That's close. Yeah, I might side adjust this above these wicks right here, 135.12, and just say let it break 135.12. That's 135.15. I had it. I saw it. I can do it. Yay. All right. Let's see. 5-day Model T 604.14. Are you talking about, we're looking at SPY? Yeah, those are things that we're going to have to figure too, right? So we have this wave. You're talking about the wave from here to here is 604.14. Okay. We need to know that, especially since we have a technical already identified there. Yeah, that's this first level breakout. So yeah, that would be a Model T move back in as a retest of this from here to here. A 50 fib pullback, if we're going to get one, would be a retest of this breakout of right here. So good. And you got two together, and you know I love two good close technicals, right? I think you should buy this if it happens. All right, I'm going to stop the recording and keep talking a little bit, but that's all we needed to do there. Let's see. Stop recording.